Welcome back. You have until Monday, April 15th to file your tax returns, as you know. If you file an electronic return and expect a refund and chose direct deposit, you should get that money within 21 days of filing. If you send in your return by mail, it'll take at least 4 weeks.
Financial expert Terry Savage joins us now. Good morning, Terry.
Good morning. I just read that only about a third of the tax returns that are going to be filed have been filed already. So all you procrastinators out there, better get going.
And what do we need to, we read what the delay is between filing, electronic filing, and regular. Is there anything new there?
No, this is really important. First of all, if you insist on doing it by paper, make it by certified mail return receipt requested. People write me, they cash my check, I'm waiting for a refund, I have no record of receipt. Make sure if you're filing by paper, you do go to the post office and get a return receipt requested. That's the big thing. But yes, file electronically. It's so much more efficient. Just make sure you've got the right bank routing code and bank account number so they can direct deposit that refund.
All right, let's get to some viewer questions. The interest on my credit card has jumped to 28%. Should I borrow from my 401k to pay it off?
Oh, no. You know, that's very tempting, but there are a lot of reasons not to do that. First of all, if you can't organize your life now when you're poor and in debt, how would you like to be retired with no income and poor and in debt? Well, and if you leave your job with a loan from your 401k, it's immediately considered income, and then you'd owe taxes on it. The interest rates are so high on credit cards. You're right to not want to pay that interest. The one thing I can suggest is a balance transfer card. And that means you will move to a new card, take the whole balance, and get a 0% interest rate for as long as 21 months. I've seen them. You can find them at creditcards.com. Just 2 warnings. You have 20 months. Don't wait till the last month to think how you're going to pay it off. Pay regularly. You won't be charged interest. If you double the current minimum monthly payment on your old card, you'll pay it off. If you do that every month and don't charge more on this new 0 interest card. But the other thing is, cancel your old card. It's just too tempting to say, well, I paid it off. I just need new tires. I'll put it on the old card. You'll find yourself buried in debt.
All right. The next question. My son just told me he's over his head in credit card debt. Where can he get help without getting in deeper?
Maybe we can put this number up. I know they have it in the producers. The National Foundation for Credit Counseling, 800-388-2227. That connects you to the nearest local agency. They can help you. They can talk you through it. They can help you set up a repayment plan with your creditors. And if in worst case, they can refer you to a bankruptcy attorney. But these are not the ripoff. NFCC, 800-388-2227. You can trust them.
All right, next one. I'm turning 65, but I'm still working and covered by insurance. Do I have to sign up for Medicare now?
No, as long as you're covered by insurance and your work insurance doesn't require you to sign up for Part A of Medicare, you don't have to sign up until you retire or quit working. Now, the interesting thing is, if you do sign up for Part A, and many people do, you can it's free, so it's no big deal, but you can no longer contribute to a deductible health savings account, not flex spending, but a health savings account. So you would want to avoid signing up for Medicare until you really need it, and you'll have open enrollment no matter what time of the year when you retire. So you can set it up then, work for 3 or 4 more years, take your Social Security later, and take your Medicare later if you've got coverage at work.
All right, this is another question. Should I buy gold or Bitcoin?
Oh my goodness, we have to have that today. Yesterday, both gold and Bitcoin made new highs. Bitcoin made a high of around 69,000, promptly fell down, and now it's back to about, last I saw, 66,000. Gold is interesting. It's trading above 2,150 today. Gold's supposed to be a hedge against inflation. But I remember back in 2008 when all the markets crashed, buying gold coins at under $900 an ounce. Gold has basically just doubled in the last decade, while the stock market has more than tripled. So gold, I always think you ought to have maybe 5% in a gold stocks mutual fund. And that's just it hasn't worked as a hedge against inflation, but it's just something to make you feel good. Usually it goes up when markets go down, not now. Bitcoin is a wild speculation. You take your choice. You can go to Las Vegas, just throw your money on the table, or you can speculate on Bitcoin. It might go higher. There's forces at work, the halving of Bitcoin, where they limit the supply and so forth, all the ETFs that are trying to buy it up. So it could go higher, but that, my friends, is a rank speculation, not an investment.
All right, real quick, Terry, please. A Treasury bill still a good idea?
Yeah, absolutely. 6-month T-bills are yielding about 5.3%. You can buy them at treasurydirect.gov. And if you go to terrysavage.com, there are a few boxes with important articles. One is how to buy Treasury bills. So yeah, that's a safe place for your money, no limit. And currently 6 months, 5.3%. Not a bad deal for chicken money.
All right, Terry's new book is called Social Security Horror Stories. It's available now. You can ask Terry a question on terrysavage.com. Thanks, Terry.
Thanks, Terry.
Thank you.
Time now for On Town.
Hey, Anna.